Hey everyone, welcome back to the QQQ vs QLD channel. It's July 4th, so happy Independence Day. Let's dive into our monthly update and check out how our challenge is shaping up. First off, we've made some tweaks to our strategy. 1. Extended investment duration. Originally, we aimed for a 30-year challenge. But hey, who knows what the market will look like in 3 decades? To give ourselves some cushion against major market crashes, we've extended it to 30+ years. This way, we can ride out the downturns and give QQQ and QLD time to bounce back. 2. Dollar cost averaging, DCA. We're sticking with our plan of investing $500 each month. It's all about consistency. 3. No margin trading. We're playing it safe with our own money, avoiding the risks of borrowing or using margin. Before we jump into the numbers, let's celebrate a milestone. Our channel has grown from 38 subscribers last month to 76 today. That's double the love in just 1 month. To celebrate, I will give a TQQQ challenge water bottle to someone who writes a comment once we reach 100 subscribers. Stay tuned. Let's check out some interesting reads. Forget Nvidia. QQQ could turn $25,000 into $1 million. A fund with tremendous long-run potential. For growth investors, one ETF that is a popular option is QQQ. It tracks the Nasdaq 100 index and gives investors exposure to the top growth stocks in the world within just a single investment. It's a safer alternative than putting all or even most of your money into a few investments, even if you're incredibly bullish on them. With QQQ, you don't even need to stay on top of what the hot new growth stocks are, as the Nasdaq 100 is made up of the top 100 non-financial stocks on the exchange. You'll still get exposure to Nvidia, but along with that, you'll also have exposure to Microsoft, Apple, and many other top tech stocks. The fund could put you on a path to reach $1 million. If you invest $25,000 into the ETF. If it averages an annual growth rate of around 13%, then after a period of 30 years, it'll grow to be worth nearly $1 million. Let's read another article. History says stocks are looking bullish after a big first half of the year. In the first half of 2024, stocks leapfrogged the wall of worry to deliver another solid set of 6-month returns, leading the S&P 500 to a respectable 14.5% gain and the Nasdaq to an even loftier 18% win. If history is a guide, stock seasonality still favors the bulls in July. In fact, the Nasdaq has closed green in 10 of the past 11 Julys. This bullishness extends into full-year results as well. Looking back to 1928, there have been 29 years when the S&P 500 was up 10% or more at the halfway mark. By year-end, the average gain was 24%. But, be careful, remember our previous video on predicting the stock market? We talked about RSI, Relative Strength Index, and how an RSI above 70 means a stock might be overbought. Right now, QQQ's RSI is sitting high at 73, which means it could be due for a drop. Last time the RSI hit 81, QQQ dipped. Keep an eye on that. Now, let's dive into our comparison between QQQ and QLD. As a quick recap, QQQ tracks the performance of the Nasdaq 100 index, covering major sectors like tech, healthcare, and consumer discretionary. On the other hand, QLD aims for twice the daily performance of QQQ. Right now, QQQ is 20% higher than its 2021 peak, $408. Also, QLD is 10% up from its 2021 peak, $94. TQQQ, on the other hand, is still 13% below its 2021 peak, $91, but catching up fast. If you're invested in these, keep an eye on economic indicators and policy changes. They can really impact performance, especially for leveraged ETFs like QLD and TQQQ. Alright, let's dive into the juicy details of our July investments. We're sticking to our plan and continuing with our $500 monthly investments in both QQQ and QLD. Starting with QQQ, we've invested a total of $1,500 so far. It's been a solid performer, giving us a 7% return, which translates to $105 in gains. Not too bad, right? Our average cost per share is around $459. Just recently, on July 2nd, I bought 1.03 shares at $482 each. Also, I received a small dividend of $1.70 as well. Now, moving on to QLD, we've also put in $1,500 here. This one's doing even better with a total return of 13.5%, giving us $202 in gains. Our average cost per share for QLD is about $92. Following the same schedule, on July 2nd, right after buying QQQ, I picked up 4.9 shares at $101 each. And just like with QQQ, I got a dividend, albeit a bit smaller, of $1.20. As you'd expect, since QLD aims to double the performance of QQQ, its returns have been about twice as good. It's always exciting to see those numbers grow and reflect the higher risk and reward of leveraging. Since May 2024, we've been investing $500 monthly in each ETF. Our long-term goal is to put $180,000 into each over 30-plus years, potentially growing that $360,000 into several $1 million. As we keep rolling with the QQQ versus QLD challenge, remember, dollar cost averaging. Consistently invest $500 monthly in both QQQ and QLD for 30-plus years. No margin trading. We're keeping it safe by using only our own money. Just a quick reminder. This is all for fun and educational purposes. I'm not a financial advisor, so make sure your investment strategy fits your personal financial goals. If you found this video helpful, give it a thumbs up, subscribe to the channel, and hit the notification bell so you don't miss any updates. Thanks for being part of this adventure. Catch you next time.